Good morning, people. Yeah, we doing? We had some technical difficulties over the last few days of last week. I made my travels here to Canada, and with that, right, a few things that we needed to fix up before we got back on stream, and I didn't really get it done until this weekend. So, apologies for that, but hope you're all doing well and are ready for the start of a new stream. We'll be streaming more often. Obviously, we'll stream here on Friday, taking a look at what's going on with the overall market. Last Friday was a pretty solid day, so I want to continue that kind of momentum now. Some of the main things that are on the docket for this week. So first things first, this week we have very big tech earnings that are coming out. We'll go through the list of those, but it's pretty much the entirety of the Mag 7 minus Tesla that's already reported, as well as minus NVIDIA, because NVIDIA tends to report much later. So we have Apple, Microsoft, Google, Amazon, Meta. I believe that's it. That makes what, 6? I believe that's it. But let's talk about a few different things before we jump into those big tech earnings. We'll take a look at those, and then we'll obviously discuss those as they come out, starting tomorrow after the bell. But the first big thing right now is oil and the Japanese yen that have pulled down here as we're about to start the week. So oil looked like it was trying to revive itself towards the end of last week, right after multiple moves to the downside, but now it's down about 6.5%. An event-packed week has kicked off with global traders on edge. Oil futures and the Japanese yen have declined a lot. So over a 6% drop in oil. The Japanese yen... how we're going to do this, USD JPY. Japanese yen, you can see is, so the US dollar is rising in comparison, Japanese yen is falling. This thing has, it gapped up, it's pulling back a little right now. It's not as disruptive, I would say, as the oil market, if you will. But a lot of concerns over the supply disruptions. Let's go back to oil here. A lot of concerns over the supply disruptions eased after Israel's strike on Iran steered clear of oil and nuclear infrastructure. But meanwhile, the Japanese minister, Shigeru Ishiba, his coalition lost its parliament majority, sending the yen tumbling to the 3-month low. So Israel on Saturday launched airstrikes against Iran in response to Tehran's retaliatory missile attack earlier this month. And airstrikes, the first time that the Israeli military has openly attacked Iran, targeted aerial capabilities and missile manufacturing facilities. The Israeli Prime Minister Netanyahu said that the strike achieved all of its goals, while the Iranian President Masoud I can't even say this name, Pezeshkian, apologies, vowed a proportionate response. And local media report that the Iran's oil industry is operating normally without any disruption. So the more targeted response from Israel leaves the door open for de-escalation and the price action in oil. This morning suggests that the markets are in the same view overall, said Warren Patterson, commodity strategy head at ING. Clearly, if we don't see some de-escalation, it would allow fundamentals once again to dictate the price direction. And with a surplus market over 2025, that would mean oil prices will likely remain under pressure. So we'll see as that kind of shapes out, but I think that a lot of the major news still lies with big tech earnings that are coming out this week. I think Google is probably the first of the few. We have Microsoft, for example. And the big thing here that's super important with these big tech earnings is that tech has been under pressure for quite some time now. They've been struggling in comparison to a lot of the other equity names, right? You've seen that NASDAQ and overall big tech has been, it's been flatlined, right? It hasn't necessarily seen too much upside momentum in comparison to the S&P, for example. If you compare the S&P and the S&P has been pushing into all-time highs. Well, you look at the names on the NASDAQ, right? The main constituents of big tech, they're not all rallying super aggressively. You have Microsoft here that I think is presenting a decent bottoming out, right? It looks very attractive for that upside momentum, and I think big tech in general is very underweight, excluding a few different names. Like, for example, you have NVIDIA and Meta that have been pressing into all-time highs. Apple is still not far away from there, but you have names like Google, Amazon, Microsoft, that haven't necessarily seen that kind of rally and momentum to the upside swing. And we'll see this week if those get love based on the earnings reports that come out, but I think they become very attractive regardless, even if earnings are weaker or if earnings are stronger. I think money after that, especially post-election, start piling into big tech. So I believe Google, if I'm not mistaken, is probably the first one tomorrow after the bell, yeah. So it's trying to gap up right now above this 170 area. It's been fighting with that for a very, very long time. So if we can gap up and start that expansion, we expand outside of a new auction to the upside. Google, along with AMD, I believe, if I'm not mistaken, are going to be reporting earnings on the same day tomorrow after the bell. And after that, you've got Microsoft, which reports on Wednesday after the bell with, who was it? Might not be Amazon. Whoops, that's the wrong thing. Might not be Amazon. No, Amazon's on Thursday, I believe, with Apple. So that means, yeah, that means that Microsoft, I think, is with Meta on Wednesday after the bell. Yeah, so Meta's Wednesday after the bell. It's very close to an all-time high again. And I think that Meta does have a lot more potential to the upside swing. I think there's strength in Meta. So the way I see it is like big tech, whether the earnings are kind of sour or not, I still like it for the longs. Post earnings this week, especially post election, I think that they're going to get picked up regardless very nicely, and there's going to be more of an expansion to help push the not the S&P, the Nasdaq into all-time high territory. Now, one of the other factors here we can take a look is the S&P futures. Good morning, Laurent. Good morning, Marco. Hope you're all doing well. Starting off this Monday fun day. So the other thing that we can take a look at is these futures. Last week there was a pretty strong push to the downside into 5,800 in the S&P 500 futures before a stronger rally. I did like it last week to see that long side pick things up so we can start pushing higher. It's just I have a few concerns with this because right now we've seen multiple failures to move through this low volume auction above that 59.10, right? Multiple failures from that area, and that's kind of what's been slinking prices down over the last few weeks. And this is going to be a major concern in my opinion right now, especially with like big tech earnings coming out. We could see a little more period of uncertainty and kind of sideways chop in this equity market. We do have a decent amount of volume that's coming out here pre-market, 183,000 contracts that have traded on the S&P, which is pretty good because we still have another 20 minutes until the market opens, so that could increase towards like 200,000, which I believe is closer to the realm of better opportunities throughout the day. But the way I see this on the S&P 500 is like I want to see the consistency of higher lows forming with like maybe low volume auctions, thick volume auctions at the lows to try and push things higher. So today, the way I see it is 58, like 53, 55 becomes the last chance area for the buy side to come into this and try to sweep this thing higher, right? The best case scenario, in my opinion, is we start rebidding above 85, 88 on the S&P 500 futures, and then we can start going towards and targeting that 59, 10, 15 to the upside, where I'd like to see that expansion through that low volume area. So that's mainly what I'll be looking at this week and trying to target for this week to start this week. If we start losing 58, 55 area, 53 area, I honestly think at that point we'll see probably deeper pullbacks. So I want to be on the camp of like higher lows here trying to form so we can get that expansion. The close on Friday didn't look too bullish, but right now the reopen on this Monday morning session is starting to flip things around a little more. So I do want to remain a little more bullish, but a little more cautious with that, and we'll see how these things shape up. So with that being said, I hope everyone has a great trading day, great start to the week. I'm glad we're back on stream, and I'll see you guys in our room. We'll open up our room, and we'll do a little more streaming throughout the coming week. So I appreciate you guys. Thank you, and we'll see you very, very soon.